Welcome to Markets Now. I'm Michelle Rook along with Mark Schultz with North Star Commodity. Well, grains leaning higher except for new crop corn and soybeans, and I believe soybean oil is lower as well. We're making new contract highs again over in the cattle complex, and hogs have been mostly lower. And let's start off talking about grains. First of all, corn and soybeans right now, we're seeing a tale of two crops, Mark. The old crop continues to be supported by cash basis levels that have been strong, and the bull spreads have been working. New crop is trading its own fundamentals, including weather, right?
Yeah, the new crop is the one that's short term on the struggle, and that is just if you look at the weather in general, Michelle, you have to view it as being slightly bearish to both the corn and the soybeans. You're going to the field early. You already have corn planters. We've got a customer south of Mason City already planting corn, dust behind the corn planter. Central Iowa, they're in Nebraska, Kansas. They're going to actually have to start irrigation pivots there to get the moisture to get the crop up out of the ground. But bottom line is you still have what I would view as an early spring ideal conditions for the most part. Now, you still got some issues that could still develop in the far western half of the U.S. where it's still on the dry side. But even that is not going to be a problem until you get into it'd have to be hanging on until May. Well into May before that became an issue. And then in the northern plains would be the other one due to maybe cooler and wetter weather in here. But if you would have asked me 10 days ago that farmers would be in the field by in Iowa by the 15th of April, I'd said no way. And here we are on the 12th of April and they're in the field. So it changes pretty quick.
It does. And so if we get into the fields on time, even a little bit early here, what does that mean for yield potential? And what does that mean overall for longer term prices?
Okay, if you go back and just study in history, if you go to the field early, history would show that you're likely to end up with more corn acres, a little less on the bean acres. If you go to the field early, it always raises the probability that you can have the corn, more of it get through pollination before you get into the heat of this, typically of the summer. And generally, it would result in that the odds are that your yield potential is much greater when you get to the field either early or on a timely fashion than it is if you come in a little bit later. Soil conditions, obviously, again, planting conditions, at least what we're being told so far, almost ideal for most of the people. So you're going to get a good seed bed, good germination, odds favor higher yield potential.
Okay. So one market that's been disappointing that hasn't put much weather premium in has been the wheat market. Do you think we will at some point? Do we need to?
Well, the demand is the issue with the wheat, and we just don't have much of it, and we're not going to get much of it because we're still the highest priced wheat in the world. So you're going to have to either get rid of the rest of the wheat, and quite frankly, that's going to be difficult to do because once you get into the June time period, you're going to start having new crop wheat coming at you from all over the globe. So I think it's still a problem. Wheat is very difficult to kill off. The hard red wheat area, obviously still suffering. What are you, 62 or 63% of the wheat in Kansas is reported very poor. I talked to one of my customers this morning. We're still sitting between 2 inches to 8 inches tall on the wheat. It's still alive. It would need rain. It has not headed out yet. So I think the critical time really gets to be is that if the rains don't materialize by the 25th of April, odds favor, you're going to start seeing deterioration move maybe quite rapidly on the wheat crop. Then you've got the spring wheat areas to watch as well. I always talk about the May 5th, May 10th time period. If they can get in the field by that time, they probably stay with their spring wheat. If it starts going after May 10th, pretty good bet they're going to switch over to corn and soybeans and cut back on spring wheat acres.
Okay. Cattle market, there's was stellar market, a new contract highs again here today. We're up into record levels in the front month on a continuation chart. Cash trade has been hitting record levels as well, but cash is at a premium to the futures yet. So how much farther could we see this thing go?
Well, we've seen some cash cattle bid up here at 178, even heard a few 179s. Now there's far and few in between, but the cash is, you're right, cash is trading at a premium and cash is king. So it's still pulling the futures on up. And again, I will still say this has been a very orderly market. Now, box beef prices have been the one on a tear. They've been doing the $8 to $12 a week to the upside. You're now approaching $300 on a cutout chart. I think 305 would be your next upside target. And after that, $319 in here. The middleman, as we understand it, appears to have lost his margin, so he's going to have to raise the price of beef at the grocery store. That's likely to be coming soon in here as we continue to march higher on the cattle market. But there, a lot of things have been done right with the cattle producer. With cash being this strong, he's selling cattle a little bit lighter because they've got high price feed, and he's got his best bid is the cash. So he moves the animal a little bit quicker. Cattle weights anywhere from 15 to 20 pounds less than a year ago on a weekly basis. You're just not producing enough beef to meet it. We will eventually, and we are starting to import more beef than we did a year ago. Going to have to in order to keep prices somewhat in check.
We're not even into the tightest cattle numbers, though, Mark. So, there's got to be some upside. Like you said, demand will be another part of the equation here, but we're not even close to the levels box beef price wise that we hit during COVID.
No, not even close. You're right. And I think I don't think you're going quite to those levels,
No.
But at the same time, your competition, eventually you'd like to think as these spreads now get to record levels on the spreads between beef and pork, beef and poultry, that you start seeing a little bit of shift away from the beef back over into the pork. But it's going to likely, history will show it usually takes a little longer than you think before that eventually happens and starts to develop. But eventually it will be the case here as you move on. But for right now, the market is still going. And I will say this, and I've said this before when you and I have talked, is that this market has still been very early. When you're at record levels, you would think somewhere along the line, you're going to have to see limit moves on the cattle market futures before you start getting nervous about some type of a high occurring in the cattle market.
Yeah, volatility usually is when we put a top in, when we see that sort of a pattern. All right, the hog market, as you mentioned it, perhaps on the short side of spreads with cattle here as we've gone up, but that market is really looking pretty much like it's on life support here. Are we close to a bottom? Because I thought that, but we're back down in these contract low areas, and the cash market is not appreciating enough to help pull it along or push
the cash market. Yeah, the cash market's not appreciating. The pork cutout market is not appreciating. Now, USDA thinks that we're going to see a reduction in pork consumption globally in this market for 2023. Now, they talk about the fact that we're going to slow things back down here a little bit. But if you really look back at what we've been doing, we've gone 7 months in a row now that the imports of pork coming into this country, into U.S., has been below a year ago for 7 straight months. And our exports have now been better than a year ago for 3 consecutive months. So I still think that slowly but surely we're going to see the tide turn a little bit better. We still got pork prices moving to record levels over in Europe. The Chinese are obviously, according to most people, trying to now look back at pork production back almost equal to where they were before African swine fever hit them back in 2019, which is pretty amazing of how they've been able to recharge everything back at those levels. But this market's still a struggle. I see the export business getting a little bit better, but there's no profit margin for the hog producer as far out as he can see right now. And eventually, bottom line, the market's just trying to tell him that it's just pork is not a major feature, even though it's cheap. It's just not a major feature, and we're still going to have to start seeing some type of contraction in the herd. I think that's probably inevitably going to happen as we move into the next month to 2 months, especially if prices do not improve over that time period.
So you think sow liquidation is on the way? How did we miss the mark on the numbers so bad? Was it just more productivity than we thought? What was it? Where'd those numbers come from?
Yeah, I think the health issue maybe got a little bit, we maybe overestimated how bad the health issue hung on in here. I go back a year ago and it was pretty bad. This one, I think this year it sounded tough. I just don't know that it was nearly to the level of as it was. It was not as bad as what it was last year at this time. I think we missed the boat on that one. And I think everybody just kind of missing the boat that we would start seeing strong pork demand continuing on globally. And there was that chatter again at the first of the year that we had ASF back in China and that pork prices are coming down. It might very well be the case that maybe they move more pork onto the market here for the short term. But right now, you would think we'd start seeing some type of stability. It just hasn't. It's not, quite frankly. I tell you that if you look at pork inventory in the coolers, I wouldn't call it a burdensome supply. It's just a function of we need something to consistently turn the market on the demand side, and it just hasn't happened. And it's not because things are too expensive. Some of these cuts are pretty cheap, especially hams and bellies. Bellies probably the number one thing that can't seem to get going to the upside, and seasonally that should be occurring.
Yeah, it's pretty crazy to watch that and to watch the futures at a premium to the cash, which can't seem to find a bottom. All right. Thanks so much for joining us, Mark Schultz with North Star Commodity, and that is Markets Now.